On the markets, CLSA's top equity strategist Chris Wood tells ET Now the housing finance companies and private banks could be value propositions. In fact, he had a candid chat with Nikunj Dalmia saying that he's structurally a strong believer on the India story. Although he said that LTCG will continue to impact fund flows, he's long on private banks and affordable housing.
I'm still overweight India because I'm structurally a big believer in the Indian story. But what I've been telling fund managers this year is that if their career depends on outperforming the Asian index in the first 6 months of 2018, they should not be following my recommended asset allocation strategy, because my base case is that India underperforms in the first half of this year. Partly because we had a very good run last year. We've got my favorite area to own in India, which I continue to own, which is private sector banks and affordable housing plays. Given the huge gains in these sectors last year, it would be a very good result if we just trade sideways. So in the short term, I'm not expecting these stocks to accelerate higher, and there's clearly a risk of a pullback. So that's one reason I wouldn't be assuming huge outperformance. But then two other things have happened which have also increased my caution on India in the near term. One is what you refer to, the introduction of a long-term capital gains tax on equity investments. While 10% tax is not a huge deal in itself, in my view this is a negative because the big positive last year in India was this huge expansion of equity mutual fund flows. I think personally it's a very unfortunate decision that was made, because you have a short-term capital gains tax and you should want to encourage long-term equity investment. And I think the negative implications of this policy are much greater than the positive from a revenue collection standpoint. The other problem is, apparently, I'm not an expert on this, but apparently the insurance industries, equity-related funds are not hit by this tax. Well, that will encourage investors to take the money out of mutual funds and invest in insurance-related investment products, which in my view is an unfortunate development. The other issue that makes India a little bit more vulnerable is the strength of the oil price. I had been thinking that oil would be naturally capped if it moved above 60 towards 70, because I had been thinking that Russia would probably cease to cooperate with OPEC supply production cuts at higher oil prices, because that would encourage a significant expansion in shale. But based on what I've been picking up lately, it may be the case that Russia sticks with OPEC for longer. Shale may not expand as much as I previously thought. I've also seen some data which has highlighted to me the dramatic collapse in exploration activity in oil in recent years relative to the ongoing increase in oil demand.
And with that, it's a wrap on this leg of the show. Thanks so much for watching.